Going over IRS Form 8898, Statement for Individuals Who Begin or End Bona Fide Residence in a U.S. Territory. So the purpose of this form, obviously, is to notify the Internal Revenue Service that you either became or stopped being a bona fide resident of a U.S. territory during the tax year. So you must file if you meet both of the following conditions. First, your worldwide income, gross income, is more than $75,000, and one of the following happens. You either take a position for U.S. tax purposes that you're a bona fide resident of a U.S. territory, and the U.S. territories are named here: American Samoa, Guam, the Commonwealth of the Northern Mariana Islands, Puerto Rico, or the U.S. Virgin Islands. So if you became a resident and you're filing a tax return as a citizen or a resident of the United States, but not as a bona fide resident of that territory, you have to file. If you're a resident or a citizen of the U.S. who takes the position that you stopped being a bona fide resident of one of those territories after a tax year where you did file as a bona fide resident, you would file because you stopped. Or if you take the position that you became a bona fide resident of either Puerto Rico or American Samoa for a tax year, after a tax year in which you were required to file a tax return as a bona fide resident of the U.S. Virgin Islands, Guam, or the Northern Mariana Islands. So generally speaking, you're probably going to know when you need to file. And for intents and purposes, that $75,000 includes worldwide gross income, which means all income that you received in the form of money, goods, property, and services, including income from sources outside the United States and before deductions, credits, or rebates. So if you do have to file, you would file it by the due date, including tax extensions of your normal Form 1040. However, you would file it completely separately. You would not send it to with your tax return. There's actually a mailing address for the Austin IRS office that you would mail this form to. Again, it's completely separate, so don't file it with your tax return, even though it's due at the same time as your tax return. So real quick, before we get into the detail, we're going to go over the parts of this form. It's 2 pages long. The first part is general information. Part 2 is the presence in the United States territory. Basically, it's going to outline, what dates you entered and what dates you left. Closer connection to the U.S., foreign country, or U.S. territory. So it's going to ask you details about whether you had a closer connection to the United States or a foreign country than you did to the U.S. territory at the time. And that's continued on page 2. And finally, part 4 is the source of income form, followed by the signature line. So if you don't file, then you may be subject to a penalty of up to $1,000. So let's go over a couple of common definitions. So first, what's a bona fide residence? You're a bona fide resident of a U.S. territory if you don't have a tax home outside the territory and you don't have a closer connection to the United States or to a foreign country. And you have to meet the presence test. So the presence test consists of a period of time if you were either present in the territory for at least 183 days of the year, if you were present in the territory for at least 549 days of the 3-year period, so the current year and 2-year look back, and during each year you have to have been present in the territory for at least 60 days. If you were present in the United States for no more than 90 days, if you had less than $3,000 of earned income from the United States and you were present in the territory more than you were present in the United States, and if you don't have a significant connection to the United States, such as a home, if you're registered to vote. So those are basically examples of, closer connection. So there are certain exceptions for military personnel and students, government officials, people that, are seafarers, so people that operate boats for a living. For the U.S. Armed Forces, basically, if you were a resident prior to your military service, you won't give up that status simply because the military moves you somewhere else. And conversely, if you're a resident of the United States and you happen to be stationed in Guam, for example, then you would not be subject to the bona fide resident rules. Like you wouldn't be a resident of Guam just because you're stationed there. Military spouses, you can choose to keep your prior residence for tax purposes. There are other exceptions and kind of rules. We do cover some of those details in our article. For a complete list of all of those broken down in the instructions, then you can go to the IRS website. So let's go ahead and just walk through this form as if we were completing it. So we've got John Doe, his social security number. Notice that at the top, if you're married filing a joint return, you would file a separate form for each spouse. That's required too. So you're notifying the IRS. Let's just say that he became a bona fide resident in the 2025 tax year, and he moved to Puerto Rico. He is a U.S. citizen, and he's going to enter his income, his worldwide gross income, and then that happens to be the same as his average worldwide gross income. So if you checked box A, then you're going to enter the month, day, and year in which you moved to the territory. Let's say he moved here on 1/1/2025. Now, just keep in mind, if with 4A and 4B, you're only checking one or the other. So if you checked 1A, you're completing 4A. If you checked 1B, you're completing line 4B. So we'll just make this pretty straightforward because we're just doing the form. So let's just say he was present in the United States at not at all. He moved on the 1st of January. He spent the entire year in Puerto Rico. And so basically now he would only complete lines 6B and 6C if he was in the U.S. territory for less than 183 days to determine the presence test, right? So in this case, he would enter the first tax year would be 2024. The second tax year would be 2023. He doesn't need to enter that information, but that's what you would do if you had to. Lines 7 and 8, did you have a significant connection to the United States? Again, the significant connection meaning a home primarily, but if you maintain your right to vote in a particular state, that's a significant connection. So let's just say he doesn't. Did he have earned income from the United States? Let's just say that he did. Earned income, by the way, it's wages, salaries, professional fees, commissions, other amounts that are received as compensation for personal services actually rendered. So, and it doesn't have to be cash. It can be Bitcoin. It can be property. And then it also includes professional fees, which would be any fees that you receive as a professional occupation. So lawyer fees, doctor fees, whatever it is, all of that's considered earned income. So let's just say that yes, and the amount was more than $3,000. Now, if it wasn't, well, let's just say that. Closer connection to the United States, foreign country, or U.S. territory. Did you have a tax home? Yes, no, maybe so. We're going to say no. He sold his house prior to moving. Did you have a closer connection to the United States or a foreign country? Again, that closer connection test is the location of your permanent home, your family, your social affiliations, where you do your banking, where you have a driver's license, charitable organizations, the place where you designate as your home on forms and documents. Let's just say that he doesn't have a closer connection. If you answered yes to line 9 or 10, are you using the year of the move exception? And we're going to get into that just a second. As soon as I find it. So an exception applies to the tax home and the closer connection test for the year that you moved to or from the territory. Under this exception, you satisfy the tax home and closer connection tests for the tax year if you meet the following requirements. So basically, if you were not a bona fide resident in any of the 3 prior tax years, if you did not have a tax home outside the territory or a closer connection, and if you're a bona fide resident for the 3 years immediately following the move. So John Doe could meet the year of the move exception if he wanted to, but we're just going to say no. The principal permanent home located during the tax year, so that would basically be wherever he ends up having a permanent home. If you have more than one home, then your permanent home is, or your principal permanent home is the place where you spend most of your time. So in this case, this was right here, because he spent, remember, he sold his house in Texas. He moved all of his stuff to San Juan. We're going to put not applicable because he did not have more than one permanent home. We'll say that his family moved with him to San Juan. His vehicles moved to San Juan. His vehicles were re-registered to Puerto Rico. We're going to say everything moved to San Juan. Whereas the bank where you conducted your routine banking, let's just say that it was San Juan Credit Union. Did you conduct business activities in a location other than your tax home? Sure, we'll just say New York City, since he traveled there quite often. He did obtain a Puerto Rico driver's license. Where was he registered to vote? We'll just say that he changed his voter registration. So this isn't advice. This isn't, we're not gauging this to determine like how you can game the system so you can get tax benefits. Ideally, when you're completing this form, you're just letting the facts fall as they may. Now, if you're a little bit closer to, the tax benefits between one territory and the other, or the state that you move from and that territory, then you may find certain variables that you say, hey, you know what? If I do this, my tax bill will be lower. In this video, we're simply completing the form, going through the mechanics of this. That's it. I'm not trying to give advice here. I'm just trying to kind of walk you through how the mechanics would work. Did you claim a homestead exemption for the year? We'll just say no. And then when completing official documents, yep, he used a San Juan address. Where did you keep your personal, financial, legal documents? We're just going to say that he derived most of his income from the United States, but he still lives in Puerto Rico. Does he have any income? Sure, he has a job. Military pension. Did you have any income from U.S.? Territory sources? No. So now in part 4, we're going to talk about the source of income. So did you have an office in the U.S. territory? Sure. He operates a home office out of his San Juan house. Did you receive compensation for personal services? He did these services in San Juan and New York City. He flew to New York City to visit with clients from time to time, but he did most of his business in San Juan. Did you manufacture an article for sale? We'll say no. Did you sell or exchange appreciated property? No. Do you receive rents or royalties? No. Dividends? No. Sale or commissions? No. So again, basically, you're going to complete this form as is, and you're going to send it to the IRS. And you would sign the form here at the bottom, date it, and send it to this mailing address right here. So Austin, Texas. So again, the primary reason that you're doing this is because if you do attempt to claim tax benefits in the future, one of the triggers for an audit is whether or not you completed this form before you just start claiming benefits. So this is the form that allows the IRS to keep track of residents and citizens that move between the United States or overseas to one of the U.S. territories. And then they'll track the people that are claiming tax benefits relevant to those territories based on the status that they claimed in IRS Form 8898. So, but there's no direct benefit to the current year, unless you're actually trying to claim a tax benefit on your tax return for that current year. So, there's no other reason other than the fact that the IRS requires this to be filed. So you can say that you're saving $1,000 because that would be the fine that you would receive if you don't file this in a timely manner. Again, based on the IRS filing requirements. So that does it for this form and in our walkthrough. It's pretty straightforward, 2 pages. Again, not to game the system, but simply to report something to the IRS so that if you do try to claim tax benefits in the future, the IRS has some knowledge of whether or not you're eligible to claim those benefits. So we'll put links in the show notes to resources we've created on relevant forms, such as the tax benefit forms for some of these territories and other forms that you might encounter as you're completing this IRS Form 8898. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see covered in an upcoming video, please hit me up in the comment section. Thank you very much and have a great day.